Good morning, Michael Feller here. On Tuesday the 29th of September, you're watching Deals TV on Business Spectator. And first, a look at the markets overnight, where stocks have rallied in Europe and the US on merger and acquisition activity. In Europe, Abbott Laboratories has made a $6.6 billion bid for Solvay of Belgium. And in the United States, Xerox, the photocopier company, has made a $6.4 billion bid for Affiliated Computer Services. That deal, of course, follows on Dell, the computer maker, which last week made a bid for another business services company. Both Xerox and Dell are going the way of IBM, which is now more of a services consultancy business than what you think it is, a hardware maker. Indeed, the hardware division of IBM is actually in the hands of a Chinese company, Lenovo, and you can't buy new IBM laptops anymore. They're all Lenovo. But anyway, that's a tangent we don't need to go into. And on to Australian deals now, where Lendlease Prime has received a takeover offer from Lendlease Corporation. Lendlease Corp owns 43% of Lendlease Primelife, which is a residential care company, an old folks home company rather, and basically they're not going to be voting on the offer. So out of a total of 966 million shares, only 415 million are eligible to vote. Hence, it only needs a rejection from 104 million shares to scuttle the deal. So it's at 31 cents or so, and it's not a huge offer. And there's many people believe that it's going to be refused. Well, indeed, but then again, Lendlease Primelife shareholders have gone through a rocky ride over the last couple of years. The company, of course, used to be owned by Babcock and Brown Communities, and before that by the colourful businessman Ted Cent. So perhaps I'll just accept Lendlease's cash offer and let it go on from there. On to other deals, where Myer is currently pricing somewhere between $3.90 and $4.90 for their initial public offer. As mentioned in breakfast deals, they have a very pretty Jennifer Hawkins on the cover of their prospectus. But is that really enough to form a good investment? There's sure to be plenty of retail participation in this IPO. But if people think that it's going to carry on through to initial public offers for Kathmandu, another retail company, and the company which owns Rebel Sports and other retail stores, they could be sadly mistaken. There's only so much of either supermodels or retail floats that the market can really take. And I'm not too optimistic on the chances for Kathmandu to price a good offer if indeed the warnings about Myer being overvalued come true. David Jones, for instance, is putting out all sorts of advertisements in the Financial Review and other newspapers arguing its case, and of course there's the bears who are talking about the market being overvalued in general after its rally since March. Now on to other deals, where Anglo American says it could happily joint venture with either Rio Tinto or BHP Billiton on its coal in Eastern Australia. That's interesting, considering there's been rumours that BHP could of course make a bid for Anglo American in the event that Xstrata drops its offer. And there's also, of course, been talk for the last couple of months that Rio and BHP could combine their coal operations on the eastern seaboard in the manner that they've combined their iron ore operations in Western Australia. And also on the topic of mining companies, Lion Diversified, a Malaysian group, could make a rival cash bid, the Australian Financial Review believes, for Polaris Metals. Currently Polaris Metals has received a scrip offer from Mineral Resources, and also in the Financial Review there's a rumour that JP Morgan could raise between $300 and $400 million for Linus Corporation, which last week saw its rescue offer from China scuttled by the Foreign Investment Review Board. That's definitely one to watch out for, and I'll see you tomorrow.